This is Greg McCloskey with the Forex Commentary for FXDD, taking a look at the Euro versus the US dollar as it digests the stress test results. If we take a look at our charts, I'm going to start off with the daily chart here. What we notice here is the 100-day moving average. That's a key moving average for longer-term traders. For the market in general, that level comes in at 128.78 here today, and is a level that is of significance on the closing basis here today. Now let's take a look at the hourly chart, and I have the 100-hour moving average at 128.79, one pip higher than the 128.78 level that we saw in the daily chart. Now, of significance as well, if I go back to the daily chart, is this 129.09 level. What does that represent? That represents a 38.2% retracement of the trading range for 2010. That is a high that occurred in January 2010 down to the low that occurred in June of 2010. The 38.2% retracement comes in at 129.09. Let's go back to the hourly chart. Look at that. Look at the reaction of the market after the stress test results. Where did we go up to? 129.010. We ran right into that resistance level, which has been a ceiling here for a lot of the different hourly bars here over the last few days, over the last week here. So that's been a level that the market has been paying attention to, and it certainly paid attention to it post the stress test results. The market is now down below what is now our 200-hour moving average. That's usually our confirming moving average. That comes in at 128.44, and I'm going to zoom in here just to show you that a little bit closer. We have this bottom trend line here. We have this green line, which is a 200-hour moving average, and the market is currently trading at 128.29 below that level. Now let's go to the 5-minute chart. Let's put a line in there at that 128.44 level, and you can see here that the market was using that level as a support level. We did break a little bit below it here after the report, moved back above it. That uses a support, broke through and fell below. So guess where the resistance is now, folks, from an intraday risk standpoint. If the market moves back above the 44, maybe give it up to 47, 48, somewhere around there. As long as the price remains below that level, 47, 48, the bias is likely to be to the downside. That is, the market should look to explore further the downside. Where can we go? Well, obviously the low for the day comes in at 127.94. The low for the week comes in at 127.33. Are these levels out of the question? Not necessarily. We have a lot of risk going on, and there's going to be less liquidity as we head into the weekend. There's going to be speculation about what may happen over the weekend as well, how the market's going to interpret this data. And right now, the market said we're a little bit unsure about the viability of this stress test. Does it really give us a true measure? And when there's uncertainty in the market, what the market generally does is sell that asset or that currency or whatever that is. That there's uncertainty about. But from a technical perspective, what we know is that the 44 to 47 level is going to be our level of risk on the top side. Look for further pressure to the downside. Look for targets to confirm further downside pressure. With once again the low for the day 127.94, the low for the week 127.33. Next targets in that direction. This is Greg Michalowski for FX Street, looking at the Euro versus US dollar post the stress test results.